There is a feeling that haunts the modern world. You feel it when you go to the grocery store. You feel it when you look at house prices. You feel it when you look at your savings account. It is the gnawing suspicion that the game is rigged. You are working harder than your parents did. You are more productive. You have technology they couldn't dream of. And yet, you are falling behind. Economists will tell you it's complicated. They will talk about supply chains, corporate greed, or geopolitical tensions. But they are looking at the symptoms, not the disease. The truth is simpler and much darker. Something happened 50 years ago that quietly broke the operating system of civilization. It wasn't a war. It wasn't a plague. It was a memo signed in secret on a Sunday night in August. In 1971, the money in your pocket changed. Physically, the dollar bill looked the same. It had the same green ink, the same dead presidents. But chemically, structurally, it transformed. It went from being an asset to being a lie. This is the story of the Nixon Shock, the year money died and the age of permanent debt began. To understand the betrayal, we must go back to 1944. World War II was raging, but the Allies knew victory was close. The great powers met at a secluded hotel in New Hampshire called Bretton Woods. Their goal? To design the financial architecture of the post-war world. They wanted to prevent another Great Depression. They wanted stability. The debate was fierce. The British, led by the famous economist John Maynard Keynes, wanted a neutral global currency called the Bancor, not controlled by any single nation. But the Americans, led by Harry Dexter White, held all the cards. And more importantly, they held all the gold. The U.S. owned 2/3 of the world's gold reserves at that time, so the Americans dictated the terms. The system they built was ingenious. The U.S. dollar would be the world's reserve currency. Every other country would peg their money to the dollar. It became the language of global trade. If you bought oil, you used dollars. If you bought steel, you used dollars. But there was a catch, a promise. The U.S. government promised that the dollar was as good as gold. At any moment, a foreign central bank could take their paper dollars to the U.S. Treasury and exchange them for physical gold bullion at a fixed rate, $35 an ounce. This was the anchor. This redeemability imposed discipline. It meant that American politicians couldn't just print money to fund their fantasies. If they printed too many paper dollars, the world would notice, march to the bank, and demand the metal. The gold in Fort Knox was the leash that kept the government honest. And for 20 years, it worked. The post-war boom was built on this stability. It was the era of the single-income family. A high school graduate could buy a home, support a wife and 3 kids, and retire with a pension. Why? Because the money he earned held its value. He didn't have to be an investor. He didn't have to gamble in the stock market. He just had to save. But anchors are heavy, and politicians, by their nature, hate heavy things. Fast forward to the 1960s. The discipline of the gold standard began to chafe against the ambitions of the American empire. The United States wanted to have its cake and eat it too. Under President Lyndon B. Johnson, America launched 2 massive, expensive projects simultaneously: the war in Vietnam abroad and the Great Society welfare programs at home. Guns and butter. That was the policy. War is expensive. Welfare is expensive. The U.S. government didn't have enough tax revenue to pay for both. In a normal world, they would have to choose. But they had the printing press. They began to print more paper dollars than they had gold in the vault. They were effectively counterfeiting their own currency, betting that the rest of the world wouldn't notice or wouldn't dare to complain. But the French noticed. President Charles de Gaulle was not a man to be bullied. His finance minister called America's position an exorbitant privilege. America could print paper to buy real French factories, real French wine, and real French labor. France had to work for money. America just printed it. De Gaulle decided to expose the bluff. In 1965, de Gaulle did something that seems unthinkable today. He sent the French Navy to New York Harbor. He didn't want the paper dollars anymore. He wanted the metal. France demanded to redeem hundreds of millions of dollars for physical gold bullion to be shipped back to Paris. Panic struck the U.S. Treasury. Then Spain did the same. Then Switzerland. The gold started flowing out of Fort Knox at an alarming rate. In the late 50s, the U.S. held over 20,000 tons of gold. By the late 60s, nearly half of it was gone. The system was bleeding to death. The bluff had been called. By the time Richard Nixon took office in 1969, the situation was critical. Speculators were attacking the dollar. Inflation in America was rising because of all the printed money. The trade deficit was growing. Nixon faced a mathematical impossibility. There were 4 times as many paper dollars in circulation as there was gold to back them. If everyone asked for their gold at once, the United States would be bankrupt. The run on the bank was accelerating. In the second week of August 1971, the British ambassador turned up at the Treasury Department and asked to redeem $3 billion in gold. That was the breaking point. The vaults were nearly empty. Nixon had to act, and he had to act before the markets opened on Monday morning. Friday the 13th, August 1971. The White House press corps was told that the president was going to Camp David for a quiet weekend. It was a lie. Nixon secretly summoned his top economic advisors. This wasn't a policy meeting. It was an emergency room for the global economy. The patient, the U.S. dollar, was bleeding out. For 3 days they debated. The traditionalists argued that the gold standard was sacred. They said that breaking the promise would destroy America's credibility forever. Their solution was painful: stop printing money, raise interest rates, cause a recession, and restore trust. This was the honest, brutal path. But John Connally, Nixon's Treasury Secretary, disagreed. He was a politician, not an economist. He told Nixon, "My primary goal is to get you re-elected in 1972. A recession will kill you." Connally argued for the nuclear option. Just close the window. Default on the promise. Tell the world that their dollars are now just paper. Nixon was trapped. He hated the bankers. He hated the French. He hated the idea of being the president who presided over a recession. He chose the political path. He chose the default. On Sunday night, Nixon interrupted primetime television. He looked into the camera, his eyes shifting nervously, and delivered a masterclass in political gaslighting. He used the word temporarily. He blamed international speculators for the crisis, framing himself as the defender of the American worker. It was a brilliant performance, but it was a lie. It wasn't temporary, and it wasn't about speculators. It was a bankruptcy. The U.S. government had just defaulted on its obligations to the world. The anchor was cut. Monday morning, the markets opened in chaos. The era of sound money was over. The era of fiat currency had begun. Fiat is Latin for "let it be done." It means the money has value not because it is redeemable for something real, but simply because the government says it does. At first, people didn't understand what had changed. The sky didn't fall. Life went on. But slowly, invisibly, the data began to shift. Look at this chart. This is the smoking gun of the modern economy. From the end of World War II until 1971, the deal was simple. As the country got richer, you got richer. Wages rose in perfect lockstep with productivity. If a factory worker produced more cars, he got paid more money. It was a shared prosperity. Then in 1971, the link broke. Look at the productivity line. It keeps climbing straight up. We got computers, we got the internet, we got automation, we became incredibly efficient. But look at the wage line. It flatlined. For 50 years, the real purchasing power of the average worker has barely moved. We are working harder, producing more, but taking home the same slice of the pie. This is the question that should keep you up at night. Where did all that extra money go? If we are producing trillions of dollars more in value, and it isn't going to wages, who is taking it? The answer is simple. It went to the owners of assets. When money is no longer anchored to reality, it becomes easy to print. And when new money is printed, it doesn't flow evenly. It flows to those who already have capital. It flows into the stock market. It flows into real estate. It flows into corporate bonds. The Nixon Shock didn't destroy wealth. It transferred it. It was the greatest siphoning of wealth from labor to capital in human history. To understand why your grocery bill is going up while the stock market hits all-time highs, we need to ask a dead Frenchman. His name was Richard Cantillon. He lived in the 1700s, long before central banks existed. But he discovered a truth that explains our modern misery. He asked a simple question. When new money enters an economy, who gets it first? Imagine the economy as a champagne tower. When the government prints $1 trillion, they don't hire a helicopter and drop it evenly over every house in America. No, they pour it at the top. The new money goes to the people closest to the spigot, the big commercial banks, the government contractors, the large corporations who get ultra-cheap loans. These people, the Cantillon insiders, get to spend the money first. They use this new cash to buy stocks, to buy houses, to buy land. Crucially, they are buying these assets at yesterday's prices. The inflation hasn't happened yet. They are getting a discount funded by everyone else. This creates a boom in asset prices. The stock market goes up. Real estate goes up. The rich get richer, not because they are smarter, but because they stood next to the printer. Now look at the bottom of the tower. The wage earners, the retirees, you. By the time the new money trickles down to your paycheck, years later, the damage is already done. The extra money circulating in the economy has bid up the price of everything. When you go to buy that house, it costs double. When you buy steak, it costs double. You receive the inflation, but you didn't receive the benefit. You are paying the tax for their free lunch. This is the Cantillon Effect. It is a mechanism of wealth transfer. It siphons purchasing power from the poor, who hold cash, and gives it to the rich, who hold assets. Inequality isn't an accident of the system. It is the engine of the system. So, we have a problem. After 1971, wages flatlined. But the American dream, the house, the car, the college degree, kept getting more expensive because of the inflation we just described. How do you keep the population happy when they are mathematically getting poor? You stop paying them with money, and you start paying them with debt. In a sound money system, you save to buy things. You delay gratification. In a fiat system, saving is punished because your cash loses value. So the logical move is to borrow. The financial industry invented products to fill the gap between your wage and your cost of living. Can't afford a house on one salary? Here is a bigger mortgage with a lower down payment. Can't afford a car? Here is a lease. Can't afford college? Here is a federal student loan. We replaced income with credit. We turned the middle class from owners into debtors. Think about the psychology of this. A saver is independent. A saver can quit their job. A saver can say no. But a debtor? A debtor is terrified. A debtor must keep working to service the interest. A debtor is compliant. This fundamental shift turns citizens into indentured servants to the banking system. You aren't working for money anymore. You are working to pay rent on money that the banks created out of thin air. And the worst part, the system needs you to be in debt. In a fiat system, money is debt. If everyone paid off their loans tomorrow, the money supply would shrink and the economy would collapse. Your slavery is the asset on their balance sheet. This is the trap of 1971. They broke the money to fund the empire. They used inflation to steal your savings. And then they gave you a credit card to hide the theft. But mathematics has a way of catching up, and we are reaching the end of the road. Once you break the link to gold, printing money becomes an addiction. Like any addiction, you need a bigger dose each time just to get the same high. In 2008, the banks collapsed. The solution? Print $700 billion. We thought that was a lot. In 2020, the world stopped. The solution? Print $6 trillion in a single year. We have created a system that requires crisis. The debt load is now so heavy that the government cannot allow the economy to function normally. If interest rates rise too high, the government goes bankrupt. If the stock market falls, the pension funds collapse. So the Federal Reserve is trapped. They must keep printing. They must keep debasing the currency to keep the illusion alive. They are kicking the can down the road. But we are running out of road. History is crystal clear on how this ends. From Rome to Weimar, Germany to Zimbabwe, every single fiat currency eventually returns to its intrinsic value. Zero. The US dollar has the advantage of being the world reserve currency, so it will be the last to fall. But the laws of mathematics do not care about American exceptionalism. We are entering the endgame of the 1971 experiment. Hear that? That is the sound of truth. The coin from 1960 is made of silver. It has value in itself. The modern coin is cheap copper and nickel. It is a token. Nixon told us the suspension of gold was temporary. 50 years later, we are still waiting. But you don't have to wait for the government to fix the money. They won't. You have to fix your money. The antidote to 1971 is simple. Scarcity. You must trade the paper promises of politicians for assets that cannot be printed. Gold. The only money that has survived for 5,000 years. It is the ultimate insurance policy against chaos. Land. They aren't making any more of it. Bitcoin, the digital answer to 1971. A network with a fixed supply, mathematically immune to the printing press. These are hard assets. They are the lifeboats. When the flood of paper money comes, and it is coming, the people holding paper will drown. The people holding hard assets will float. Most people will never understand what happened to them. They will spend their lives running on the hamster wheel, blaming their boss, blaming the other political party, blaming bad luck. They will never realize that the money itself is the thief. But now you know. The system is designed to strip mine your time and energy. It is a ledger of debt, but you can choose to opt out. You can choose to save in something real. The year 1971 broke the world, but it doesn't have to break you. History is a ledger. Make sure you end up on the right side of it.